All right, hey guys. So I just wanted to, in this little talk, I guess called this lesson one, I just wanted to demonstrate what is possible out of the stock market. So in the stock market, it works off of this concept that is known as compound returns. Um, so basically, you're making gains or losses day to day, month to month, quarter to quarter, year to year. So think of it as if you're going to put $1,000 into a savings account. Now, what do you make off of a savings account? Um, at a local bank, I think like 0.8% is like a pretty typical interest rate. So I just want to show you what that would look like. So $1,000 you start off at the beginning of the year, you put that into a savings account and you make 0.8% interest. At the end of the year, you're going to have $1,008. You made $8. Now, a friend of mine, he has found some pretty good online savings accounts, and he's able to find usually somewhere between 4 and 4.5% interest. So he starts off with $1,000 on his savings account, and at the end of the year, he's at 1,045. So he made $45. Now, after 2 years, he's going to be at 1,092.02. So he didn't make $45 more the second year. He made $47. So that's compounding interest. That means every year that you have your investment either in the stock market or a savings account, it's compounding where you make incrementally more money each year. So the first year you start off with 1,000, so you're at zero. The second year you made 45. That first year you made 45, like from year 0 to 01. And then the second year you made 47.02, and then the next year after that you'll make more because that percentage is being added on to your new total. So that's compounding interest. So to give you an idea of the power of compounding interest, you start off with 1,000. Year two. So they say the stock market returns an average of 8% across the board. That's the average. And you can't rely on that because every company is different, but they say that is the average. I'll tell you that's what most financial advisors use for a figure when they're trying to get you to be their client. So at 8% interest, you start off and you put $1,000 in, you're going to be at 1080. And then you're going to be at 1166. And then you're going to be at 1259. Then you're going to be at 1360. And you're going to be 1469. So that's 1, 2, 3, 4, 5, 6 years in. So you're not going to get rich off of that. I'm pretty much telling you that, but it's better than a bank account. But where are you going to get your 8% return? That's the that's the average, but every company is different. And I can tell you what happened to me a lot is I put my money into a stock and it's just always a loss. That happened to me for a long time, so I'm going to be talking about that as we continue with the series. Um, which methods I had been using, and what a lot of people do, because I can tell you, pretty much anyone that opens a stock market account, they put their money in and they lose their money. So I want to help people avoid losing their money. So if you want to learn how to avoid losing your money, just subscribe to me, and also just keep an eye on this playlist in particular regarding the stock market. So we're moving on. So this is what you can kind of expect. Year 0, year 1, year 2, year 3, year 4, year 5. So we're not getting rich off this. And so how do people make a lot of money off the stock market? I'll tell you what is possible. Start off with 1,000. Okay, this is year 0. Now let's say we're making 40% gains. 1,400 year 1. 1960 year 2. 2744 year 3. 3841.60 year 4. 5378.24 year 5. 7529.54 year 6. And now we're 10,541.36 year 7. This is 40% gain in a year. I'm telling you, this is possible on the stock market. This is possible. And this is how you can become wealthy, because you effectively, in 7 years, 1, 2, 3, 4, 5, 6, 7, you basically multiplied your value, your wealth, or your assets by basically a factor of 10. You turned 1,000 into 10,000. Now, the important thing about the stock market is to understand that to turn 1,000 into 10,000, it is exactly the same difficulty level as turning 10,000 into 100,000, and 100,000 into a million, and a million into 10 million. It's all the same. It's a factor of 10. So if you start off with 1,000 and you play your cards right, in 7 years you'll have $10,000 just off a $1,000 investment. Now, if you're a hard worker and you've kind of accomplished decent income within the realm of reality outside of the market, you got a business or a good job, a lot of extra cash coming in above and beyond your means of living, and you can just go ahead and put $10,000 in the market. In 7 years, you could have $100,000, and I think that is best case scenario on the stock market. And I'll get into why I think that is best case scenario, and somewhere along the line in this series. But I don't think you're going to do better than this. This is absolutely the best that the stock market has to offer, in my opinion, and I think this is achievable. I think this is achievable. So if you're interested and learning how to achieve this, then again, just subscribe and also make sure you're keeping an eye on the playlist that this video is within, and make sure you take a look at all the videos within this stock investing playlist. So that's gonna wrap up this particular talk. This is just defining what is possible within the realm of the stock market and what we can gain from it. So this, to me, is better than a bank account. So average bank account, again, you might get like 0.8% interest, maybe better. If you really look around, you might be able to find like 3 to 4.5% interest, but that's not going to make you rich. That's going to make some money. In the plus side to a bank account is you can't lose that money theoretically. I mean, I'm sure there are scenarios in which you could, but I mean, in general, I'm pretty sure it would have to be pretty much a very disastrous scenario in which you lose a money that's whatever it is, backed by the federal government, as far as banking is concerned. So the plus side to a bank account at 4.5% interest is it's safe. You can't lose that money. It's guaranteed. The plus side to the stock market is you can get massive 40% gains. The downside is you can also lose money up to 100%. So it's risky. Never put into the stock market where you don't that you can't afford to lose. But if you're playing your cards right, this is possible. 40% gain within 7 years, getting 1,000 up to 10,000, and then in 7 more years. So we're talking long-term investment. Like, you're watching this video, and I'm hoping I'm gonna spark something within you, but you're not gonna remember me or this video by the time you're a millionaire. Like, you put $1,000 in tomorrow, in 7 years from now, that's 10,000. 7 more years from there, it's 100,000. And 7 years more from there, it's a million. You are not going to remember me, but hopefully, this kind of sparks some interest and gets the ball rolling. This is where generational wealth comes into play. There's only so much possibility. Like, you're not going to turn into a millionaire overnight. Like, it's just not going to happen. But you have to have like a financial plan in place. And if you have a really, really strong plan, this is possible. And basically, in 21 years, if you're 20 years old, by the time you're 41, if you put $1,000 in at 20 years old, then by the time you're 41, you could have $1 million just off that $1,000. Now, what if you do 1,000 a year? What if you do 1,000 a month? Like, what kind of wealth are you gonna accrue by the time you're 40 or 50? Like, I'm pushing 40, and time's kind of running out for me. I started investing in the market when I was 20, 21 years old, and I made a lot of mistakes, and no one was there to really show me the correct way to do it. I always talk to people about it, but those conversations always spiraled out of control into the realm of gambling, and that's not the way to do it. So again, I'm going to teach people what I now think is the right way to do it. The only way I've been able to make these sort of gains, within a year. And time's running out for me, but if you're 18, 19, 20 years old, then time is not running out for you, um, just take the time to watch all the videos within this playlist and hopefully, become a little enlightened. And I'm going to try and give some knowledge that I really wish someone had given me when I was 20, 21, 22, 28 years old. So, anyway, on the next video, I am going to go over some methods in which you're able to invest, and then we'll kind of continue on our way. But I'm going to presume you do not even have the ability to invest, so I want you to figure out how to do this. So that's it for this video, and just keep an eye out for the next.